This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Just quickly, if you have an interest in learning more about my approach, I would suggest starting with the book, which I am offering at a discount right now. Go to rabilstockresearch.com/book to find out some more information on that. Okay, let's delve right into the market conditions. Still a little under the weather. I'm trying to recover here, but anyway, let's get going because we've got a sentiment number that is now growing to get more. And so the higher this number gets, the II sentiment bull bear spread, which is at 39, that's 39% more bulls than bears, and 36% bulls right now. Or actually last week it was 36. So it went from 36 to 39 this week. The higher this goes, the more risk there is in the market. And we could see it push up into the mid 40s potentially even. And we've seen it can linger. It can keep pushing higher while the market keeps pushing higher. And we've been saying that since it hit the 35, 34, 35 mark a few, 2-3 weeks ago. But the point I'm making here is we're getting into a danger zone here. We're getting closer and closer to the end of the year. We got to be ready, I think, for some type of a setback in the market. All right. Now, what type of setback that is going to be dependent on everything else that I talk about. We've got two things going against us right now. Everything else is pretty positive overall. We're extremely overbought and we're getting too bullish. All right. So we've got those two things going against us. That is more of a short-term signal right now. Now, that doesn't mean that this can't turn into something more significant, but not based on the backdrop of what we've got. All right. So the backdrop is the volatility is really not that bad. I'm going to show you on the daily in a second why this moved to neutral, but the weekly is still in a pretty strong position. Now, we're basically positive in trend and momentum on all three time frames. I switched this monthly up to, actually, this is wrong. This is supposed to be right in the middle. It's the momentum that's supposed to be here. All right. This momentum should be right about here. It's positive, but it's not really strong. This should be over here. I mixed those up. So either way, we're looking at all the trend and momentums on the positive side of the ledger. All right. And the only blemish we have is this slight increase in volatility, but I don't think it's enough to turn it right now, but we'll see. Let me go into that right now. So just to quickly let you know, we're up at this 85 mark on the RSI 5. I mean, we are overbought. We're up in the area. You'd expect a pullback. We're pretty far away from the 18-week. I like putting the 18-week on this chart so you can just see how far away we are. But look at what's going on here. I want to zero in on this. Look at how the average true range crossed above the 18 on the time frame, right? So we've got an 18 moving average of the average true range. We've gotten above that. Now that line is still declining. If we get continued increasing in volatility, then this line will cup around while this stays above. And I actually like to see a little higher bottom form, almost like a trend change in the average true range take place. We don't have that yet. We just have a blip above, and I see this a lot, and a lot of times you just go right back down. But it's an alert. We want to be aware this one big bar changed, made this go up. And you know why? Because all these other bars are so small. These bars have been so small. I guess this was a decent sized bar, but this is just a monster compared to most of the others here. So we want to be aware whenever we see increasing size to the size of a bar in any time frame, we know that the risk is starting to be elevated because volatility is increasing. All right, if we look at the weekly, in fact, we can see that right here. Look at this average true range and the moving average, both declining. It made a blip, just like I'm talking about what's going on right now on the daily, and then it just dropped right back down. So we don't have anything yet on the daily. It's an alert more than anything, switching into neutral. But, you know, we want to start there and then follow up and see what it looks like the following week. And you can obviously on a daily chart, you can do that day to day yourself. We are up against the high while this is taking place. So we've got an overbought condition, got people getting a little too bullish. We're heading into the end of the year. It's very possible this thing is going to try and clip the new high And if we does that into the new year, then you probably should be on the lookout for some kind of a reversal because of how far away this is. You see what I mean? Like we're setting up for a failed new high, not necessarily a failure in the trend, but a failure in the breakout, and then it could consolidate after that. All right, let's go ahead and look at the individual time frames. This has all been set off on the rally off the 18 and the 40 month moving average, which were set up by a pinch play. All right, pinch play, nice turn above the zero line, and then we got a pullback that held the moving averages, held the signal line, and green DI is now making a higher high, so that's why I moved this back to positive. Because it's a low ADX condition, I'm not putting it in the strong positive camp, but it's better than neutral because of what's going on in MACD. All right, look at what's going on the weekly. We're up. I think this is the 8 weeks in a row, and green DI has kicked in again. It's at another new high for the year, and I think we have to respect that. What I respect, and I love the way this rallied off this low. One thing I'll tell you, and this is not doing this analysis on this one chart, but it is the analysis that I do when I look at thousands of charts each week, is there's a lot of improvement taking place under the hood. When you lift under the hood and you start looking at all the things underneath that are driving what's going on, there's a lot of improvement. And one thing that I really like is that it's not just like Apple and Microsoft going straight up. It's actually Apple and Microsoft are not performing quite as strong on a relative basis as some other areas. We're seeing a lot of improvement in financials. We're seeing a lot of improvement in basic materials, even some healthcare, which has been dead on arrival this year, done really poorly. They've shown some signs of life, like they want to play in 2024. So seeing that, I think, is actually an encouraging sign. And also, I've talked about the IWM that continues to trade pretty well. I'm not going to spend the time on that right now. Let's look at this daily chart. Momentum conditions are still good. All right. I mean, this is very, very strong confirmation. There's a little mini divergence off this peak that's now formed. I mean, could this pull back? I mean, definitely. And what I said to in my subscriber video this week is that, yeah, I mean, it wouldn't surprise me now just because how ridiculous it's gotten for this to pull back now instead of waiting to the new year. It's a little nuts. I don't know that it's going to happen, Christmas, on a Friday before Christmas. But anything's possible. We could get a little decline just based on how big of a move it's made. I don't think I'd be looking for trend change right now, and that's based on the momentum. Now, I'm looking at the momentum of the market on the ADX on the daily chart for the S&P. However, I look at a lot of individual stocks showing really strong, good surges off their low and breakout patterns with good confirmation. So that leads me to believe a pullback would be buyable if the pullback is good. So if we get a breakout, we always want to watch the quality of the pullback. If the pullback is violent to the downside, then it's not buyable. We're probably going to form some kind of a range. If it comes in a little bit softer, more like in a 45-degree angle, not violently to the downside, then we could look to be buyers. I will say there are a couple days that qualify as distribution days. O'Neill wouldn't really refer to this as a distribution day. He definitely would call that a distribution day, but I don't like it where you gap up and you end up forming. I think obviously some people took advantage of that. It looks like selling pressure a little bit, and then you get another one here. If another one builds up over the next few days, now all of a sudden we've got 3 or 4. That would be the first time that's happened along the run. So we want to keep watching that to see if that increases the evidence of a decline. Now, an easier way to do it is just to keep a really close eye on what the hourly is doing. And this is the first time in, really for the month, because we were already kind of sideways, turned up, and we're making this move to the upside, and now we get this knife down. All right, big volume, but we don't have any follow through. And this was the area that I've been watching. Okay, we're coming back up to the 18. Well, maybe this gets hit on Friday. Maybe Friday turns into an ugly day and this fails at the 18 and we get a leg to the downside. I don't know. Just based on the way this is traded, it looks like it's almost like a spike and ledge pattern is almost what it looks like to me. Another pattern from my course. So when we get the spike to the downside, we move up, we test it, so I don't know. And we're already back to the zero line here, right? So you got to be ready for anything at this point. I just don't think if I go down to a 10-minute chart, I'm pretty sure this is not going to really. It's not really going to look. This is a little too strong, which means it's going to take. We're going to get overrun here. We've already got overrun. It's probably going to take a little time to roll over if it's going to happen, but it is still set up. It's still got the potential if it fails here on the hourly chart. So we've got to keep that open as a possibility. Although, depending on how the market opens tomorrow, it might already be all said and done. I'm doing this Thursday afternoon after the close. So we'll have to see how things play out Friday morning. So that's how I would handle this. I still have an upward bias. If we get a pullback, I think it's a buyable pullback in most instances, but I would stay focused on individual stocks right now just because the index is going to do what it's going to do. Right now, Microsoft has been pulling back or whatever. It hasn't really done that much. By the time some of the other stocks are pulling back, maybe that's going to start going up. So if you focus on the index, you can miss the individual stocks. Stay focused on individual names, and I think you'll be better off. Have a great holiday weekend, and we'll see you next time.